Still, the relatively good outcome of the meeting between Mr. Xi and Mr. Trump adds to the sense of relief for investors. A range of worries about the Federal Reserve's plans to continue raising interest rates, the impact of the midterm elections in the United States, the trade war and signs of slowing global growth, weighed on stocks in October and November. After it peaked on September 20, the stock market's gains for the year melted away as the S&P 500 slumped more than 10% through November 23. In recent weeks, several developments had also helped allay those concerns. Last week, the Fed chairman, Jerome H. Powell, sparked a market rally when he said interest rates were just below a range of estimates for the neutral level, meaning the Fed was nearing the point where it would not be tapping on the brakes or pressing on the gas on the economy. His statements raised investor hopes that the Fed might not lift interest rates as high as previously thought. Meanwhile, the third quarter earnings season has shown corporate profits remained strong. The midterm elections on November 6 went largely as expected, with Democrats taking control of the House of Representatives and Republicans retaining control of the Senate. What were the worry points? Earnings and sales, the election, China, interest rates, said Richard Natkinson, a portfolio manager at the asset management firm Neuberger Berman. Wow, guess what? It's all been mitigated. Mr. Natkinson stressed, however, that the market's worries had not been resolved. Investors remain aware that the conflict between China and the United States is far from resolved, and stock market enthusiasm may be fleeting. We see it obviously as a positive that there is a pause in the trade war talk, said Richard Weiss, Chief Investment Officer for Multi-Asset Strategies at American Century Investments. But it could reignite at any moment.